What's going on, traders? Hope you're having a great holiday weekend. Happy 4th of July to everybody. And my name is Shark. Wanted to do some analysis for you guys on the upcoming week here on the E-mini S&P futures as well as the NASDAQ 100. Reminder that this video is, of course, for educational and entertainment purposes only and in no way should be viewed as financial advice. Before we get into our bigger picture levels, as well as some day trading levels, some other data that we like to look at to help formulate a game plan for the week, let's get into the economic calendar and see what we have in store. All right, Monday, nothing really going on. Tuesday, consumer credit, 3 o'clock. Looks like we've got FOMC minutes, which really haven't been too much of a volatility event, but we still want to be aware of that on Wednesday, July 9th. Initial jobless claims, Thursday, July 10th, 8:30. Looks like we have a little bit of Fed speak coming up at 10 o'clock and 2 o'clock, 2:30 as well. And that's pretty much the only thing I will be watching, maybe just the FOMC minutes and jobless claims, but nothing really impactful this week for us overall. All right, let's start to get into some charts here. Going to start off with the E-mini S&P futures, and we're going to take a look at here the weekly chart and just a blank analysis here for us before we pop over to any actual levels that we already have drawn out. But the main thing here, inside week on the short week, trading inside of the previous week's range, so not really too much to go off of here on that shortened week. I will say though, structurally, right, as long as these highs hold, really, we can afford a pullback right into that area. Now, we start to break down underneath that, we can be talking about a little bit of a further pullback. But for me, as long as sorry, that line was not straight. But as long as we hold really basically over, what are these levels here? Let's look to these highs. 61.70. Yeah, we're going to say 61.65, 61.62. Just trying to get a kind of an average here. Yeah, so basically 61.70 to 61.50, about 10 points, give or take there. As long as we're holding that, I don't believe that the market from this weekly perspective would be in any type of danger overall, and we can afford a pullback into that area and then lock in a higher, we just had displaced, made a higher high, a new all-time high, and now we could certainly appreciate a pullback to retest this area where we did shift the market structure once again, and then from there use that springboard up to the 6,400 potentiality. But I do think that we've pretty much been in melt up mode here last week on the shortened holiday week, and it would make sense to me, especially now we're starting to see just slight overbought conditions here on our weekly overbought and oversold indicator, but nothing too drastic there. But we're going to see here if we in fact do get a retest of that break of structure and then give us a little springboard there. So where did we close? We closed off the highs. We closed down 62.83. Half high was 63.33 quarter. And this area right down there is about 61.60, so a decent drop there potentially to retest that big major area. All right, let's take a quick look here on the weekly chart, some of those levels that we do already have pulled up, and we're kind of just reiterating. Now we could make a case here a little bit for a potential area the week of the 23rd, potentially if that high holds. I think that that's another area that we could pay attention to. And actually, I want to come down a little bit on that to the body. There we go. So more immediately, 62.66, which is about 20 points lower, that would need to hold. And 62.25, 62.23, that area here, basically the weekly high again of the June 23rd of that week. If that starts to break, I think under that 62.20, that will be the warning sign that it'd be more likely that we're going to come down into that 61.60, 61.65 area and retest these weekly highs here. Again, that would just make sense to me structurally. And if we start to break underneath that, well, then we can start to, again, talk about a little bit further of a pullback, maybe down into the weekly high from the 16th around 61.10. And very close to that 6100. Price is pretty extended here from that weekly 9 and 20, so that is definitely another concern for me. Does that mean that I want to just go out and short the market right away? No, of course we're going to wait for price to give us a little bit of a confirmation about what's going on right now. But currently, let's see, from the high, and we already started seeing that pullback, but from the all-time high, we're 258 points away from the 9, and then if we're going to count the 20 from the all-time high is about 400 points there. So certainly, definitely, a little bit extended in my opinion. So we'll have to see. But like we said, from that weekly perspective, that 62.20 area would be kind of the sign for me that we're starting to unlock that potentiality of a bigger pullback than what we've got. But I will say, of course, here we've got to maintain with the trend for the bulls. As long as we hold over the 62.65 area, I'll just see this as charging up for a possible more reaccumulation, and we just end up potentially going sideways like this, building up a nice high and tight flag, and then we take that rocket ship up into that 6,400 on the SPOOs here. So we'll see what happens. Okay, let's break it down here and get into a daily chart and see what we can take away from that. And let's get the daily chart up here. Okay, and the 9 here on the daily. Now, we certainly are very spicy here on the Shark Momo. Where are we at? 13 overbought. So, I mean, it can stay sustained up here. Obviously, we've seen it before, but we're certainly getting a bit of a warning sign there for a possible counter trend fade coming in shortly. And now that the 4th of July is over, no reason for the markets to go up anymore, right? Because it would just be unpatriotic for them to go down in coming into the holiday. All right, so we do kind of have a nice confluence here for a potential long around that 62.35 area. We have the daily 9 at 62.30. So, and that does also kind of line up with that area. It's a little bit messier here on the daily chart versus the weekly, but here's that same area of structure that we did break over that is going to be key for us for the bulls to hold if they want to maintain. So not only do we have a retest of a big area where we did shift the structure in the market, but we do have the daily 9 right underneath it for potentially another counter trend, or a long position. I still do not really like the trade location overall for new money longs, but of course, if we're talking about from the day trade perspective, of course, these daily levels can work out for that as well. It's still here again, pretty extended from the 20 here, not as much from the 9, but on the 20 on the daily, big time extension in my opinion. And let's just see how many points away we are from that. Now, obviously, I know we did from the all-time high. We're going to go from about 195 points there. So definitely it's sitting right around 61.44. So that is interesting, and we might need to see a little bit of pullback, some sideways action for these moving average to slowly creep back up higher. All right, let's get into some day trade levels here and see what we can take away from a more granular perspective. Let's see what we got. Okay, here we go. Let's get a zoom on. All right. Now, for the bulls, what do we have here? All right, we are under the 20 and we are under the 9 on the 30-minute here. For me, structurally, all things being equal, need back over 62.90, 62.88. All right, let's see some price action here for the bulls. Right, we want to see some candles start to close above this area here, and I think that that can give us the energy to come back into basically 6,300, 62.98, somewhere in that area, very close, give or take 3 or 4 points, but I think that would be the next target. Up and over 6,300, 63.05 is another big spot where I think then we would travel up to. Not that much of a journey, only 5 points higher, but this was an area where we did start to really break down from that bear flag, it looks like, on Friday on the short trading session. So yeah, but over that 63.05, then okay, back on track. 63.10, 63.11 would be the next area from there, and we'll see what happens. We could see some resistance again at that 6,300. That would not surprise me either, seeing something like this coming in and people shorting the whole number, but it has been a hard short during this melt up for the bears. So we'll see. All right, so ideally, what do the bears want to see here? Well, they want to stay underneath that 62, well, ideally under that 6,300, but under 62.88. All right, let's just stay underneath that, and let's start to create that lower low and try to attack these lows here at around 62.75. So under 62, stay below 62.88, and underneath 62.80, 62.82, back down 62.75. I think we'll be back on the picture to hit these equal lows right over here. We start to break under that 62.75. Watch out, 62.68 I think would be the next area down, and we've got the 30-minute 200 SMA there. Could be an interesting spot to potentially look at a counter trend long trade if we do come down into that area. I will say underneath that 62.68 though, probably drop another 8 points down here into these previous highs, into this area right here, little break of structure, and 62.60, another spot that could be interesting, either again for that short target or for a counter trend long, if in fact this one does not work. So that's all I've got on these SPOOs. Let's get into the NASDAQ now and see what we can take away from the tech sector. Okay. All right. Now, earlier we were in this balance range. Clearly here we've gotten over the equilibrium, took out these highs. Very similar story on this market as far as the structural perspective is concerned. I'm going to bring this up a little bit higher here. And the NQ is just obviously not as clean as ES is. But basically here, what do we have? The highs, want to pay attention to the weekly highs from February 14th, the 17th and the 10th, and as well as from last December. So it's around 22,225, okay, and I will give it about 25 points there to 22,250. Pay attention into that kind of range. The high from the week of the 17th in February was 220. So yeah, give or take 20 points there. But that 220 I think would be pretty much the last stop for me. And then anything under that, well, we'll see about a further retracement. But excuse me. Let me get some over here. The futures market about to open up, so we'll see what that gives us. But As it stands, here's the break of structure. As long as we hold, again, wouldn't mind a retest. Boom, and back up. Same story here, being a little extended. Let's wait. We might get that sideways action again, and that would be the most bullish thing if we could stay high and tight here for a weekly flag for another push into 2400. But to me, it seems like we would want to retest the structure, and that would give us the springboard to entice some new buyers up here in this premium buying by all-time highs. Coming out of the holiday, a little bit scary. So we will watch also here on our Momo. We're at a 12, so a little bit more overbought on the weekly on NQ than we were on the SPOOs. So that is interesting. And we've seen the weekly, of course, last for a while, but a lot of times that's when you get a big pull on the weekly. So very, very interesting there to see that, especially coming out of the 4th. I don't know if anyone remembers what happened last year after the 4th of July weekend, or holiday, I should say. All right, I think that's everything I really needed to go over on NQ. Let's pull up the weekly here that we've got. Okay, and I can kind of do, you can get a little something like that. Boom. There we go. So I would say if we break under the 22,220, yes, obviously that's going to open the door. Maybe it can give us about 100 points lower into the weekly highs from the 9th of June. And boom, it also hit there January 20th. And the week of December 23rd was in that area too. So 3 touch points there, looking good. Let's see what happens if we do get under. Do we see a little 150 point rally down, 100 point rally down? That would make sense to me. I think opening the door break below the week of June 30th. So I think opening the door there, what's that low? 22,580. So I think that could open the door for that other retest. And let's have this 9 kind of catch up too, especially if this starts to come up into that 22,100 area. That could be a nice potential opportunity for the buy. All right, let's take a look at the daily chart. All right, daily 9 sitting right above some demand here. The highs from back in February, 22,260. Where's this? 265. And we got the 9 sitting at 22,715 basically. So interesting. We'll see how the market reacts if it pulls back into that area. We also do still have the highs from back here, which pretty much do line up with the 9 at this point. Well, they're a little bit higher. Either way, I really wouldn't want to be along, at least from a swing trading perspective. Up here, let's see if we retest and see how the market handles the 9. So still a little extended from the 20 for me. What is this? Probably about 400, maybe about 307 points from the all-time highs. Oh, well, from when. What did we close? Close below. So about 500 points from the low, from the highs, about 725 points. So that is a little extended. SPOOs seem a little bit more extended to me than NQ. All right, let's get more granular. Yeah, I wanted to take a look at our overbought reading here. At 12.43. Okay, interesting. Almost the same as the weekly, so that definitely is interesting. get into some day trading levels. All right, what do we need to see from the bulls here? We need to get back up and over 22,840, right? Pretty much lining up with the hourly 9 and 20. As if we stay below, okay, watch out. I mean, to me, this just looks like pretty much a bear flag, an H pattern coming on here. So we could definitely see that play out. But for the bulls, back over 22,950. Okay, then we've got some opportunities to head back up into, and we'd really, of course, then got to contend with the whole number at 2,300. But certainly, if we get over that 2370 back on the watch for me, the 10 o'clock high from last, what is this? This was Thursday. That would be my bet. Otherwise, stay below. We see this bear flag play out. Watch to see if we come down to about 22,815 into that area. That would not surprise me. Might do a little pit stop at the highs here from Tuesday in the early morning session. Well, that is the 10 o'clock high there. So that is a potentiality around 22,850. And we have futures opening right now. Oh, and looks like a gap up on futures. Oh, let's see what happens here. Very interesting. So they are up and over by about 20 points. And you can see here it actually dipped down to the low. The low there was that 22,940, just like we were talking about. And the bidders came back in. So let's see what happens here. If they do end up, what is the high? Was just 2 points away from the 2300. So that was interesting to see there in real time. It looks like they are going for it. Let's see if they attract any sellers up there. It wouldn't surprise me. Okay, so looks like the bear flag, here it comes. There's the 2300, 2310s trading right now, 2311s. See, people are going to sell into it more than likely. I think they're going to try to put some pressure on this and get it back below 2300, but if they can actually sustain it, well, like I said, then you could probably get another 70 points, 75 points up into the 2370s. Okay, so back below 23 or 2240, then we can start talking about those lower prices, which right now, of course, is invalidated, and the long is just ripping up. Underneath, stay underneath though. Again, like I said, 22,815, and then underneath that, certainly underneath the figure at 22,800. Take us down to 22,775 would be what I would be looking at. Breaking under that, then we certainly probably have a date with the 200 SMA, and that's sitting around 22,700. Break underneath that, 22,675 would be my next level. So the path there, obviously we're seeing the bull path kind of play out. But here at the path for the bears, boom, maybe we come down, up, bounce, boom, something like that. So let's see what we get. So far, bulls in control. Sellers did come in and sweep down underneath that 2300. As I was thinking, they'd try to put up a little bit of a battle there. Not going to make it that easy. All right, so I think that's everything I wanted to go over for the NASDAQ. We do have a long plan and a short plan intact now, so we are good to go there. Let's start to take a look around the rest of the market data points and see what we can take away from those. we'll start off. Let's just take a look at the 1-day VIX. The yield curve, I don't think really has done much. Flattening out a little bit. Okay, let's see. A little pep here in volatility, but nothing really to speak of. Things get interesting over 22.50. So, nada. Let's look at how many stocks in the S&P 500 are trading over their 50 period moving average and their 200. I really like to pay attention more to the 50 as it obviously is a faster moving average here. Okay, up about 77% of stocks trading now over their 50 period moving average. Now this is usually an interesting spot. So I'm going to be looking to see if we get into that 80% range, and that might start to give me a little bit of another confluence for a potential counter trend trade and on the markets. But not quite there, but we're certainly getting a little bit extended from what we've seen the market react in this area before multiple times, as you can see here. 200 looking a lot better, over the 50% marker now, looking good. As long as that stays over 50%, there is no issue. So 50 giving a potential contrarian sign, 200 looking good. And I'm not talking about a market crash, of course, just a little pullback in the market, which it certainly can afford. NQ now trading 10 points underneath the figure. New highs versus new lows. Nice expansion of breadth here, getting over that. You know, we can see here we never got underneath that zero line and pushing up higher. This is certainly looking a lot stronger, and that is good. So getting a little bit firmer grasp there over that zero line. That is a nice bullish checkpoint. I'm going to look at the junk bonds here in isolation. And the SPOO's now trading over 6,300. Not what you wanted to see if you were a bear. Junk bonds just ripping up to the highs. Getting a little overbought, but no divergences there. Everything's in lockstep. Let's look at the bonds. Calling James Bond. 3 to 7 year. All right, kind of hitting this double, triple top area now. Coming down. See if this ratio gets back over the 50 period moving average. Could see rates start to come back up. All right, we did get close to that 88.40 target on the bonds. Now we're tracing back. Let's see if that 87 now wants to hold. Let me get some type of double bottom. I know we were trying to look to see if it would tap that 87. We were looking for that at first. And now we're coming back to retest it. Does this give us a springboard back up and to hit that 88.40? Giving us some relief, more relief on the yields. Let's take a look at credit spreads. All right. Coming down still. Risk is on for equities. That's bullish. See if there are any divergences over in the Dow transports, which I haven't looked at in a minute. Yeah, a little bit with this candle here. It's a little bit of an uglier daily candle on the transports. Versus the Dow. So slight bearish divergence there, I would say. Ten-year coming. Okay, here we go. All right, got close to that 42. Now coming back to retest that 43.60 area. Not sure they can get up and over it. So we're getting close to potentially here where we're going to top, hit, reject, and then this gives us that double bottom on the bonds at 87 for the bonds to head up if in fact we do hit there. So I could see that happening. The dollar just still getting decimated down here. Let's just mark off this low. So it's been real tough on the dollar recently. It just has not been able to get its footing. And let's just take a look at regular VIX. Yeah, we got a little offsides, but balanced off, but nothing crazy. And our put to call ratio. And the VIX, let's see. All right, we did hold that 1575 area, 15. As long as we hold that, we could just stay here in this holding pattern. But if we start to get up and over, you know, this area, around that 1750, 1775. Could come back up into the 19s, possibly 20 once again. So this doesn't really look like a buy side curve, but we could be coming up. We head up back up into this area, and then from there we reject. This push up gives us the higher low on the weekly or the daily chart on the indexes, and then we bounce. And it takes VIX down, and then we just resume up higher. That could be something that you want to pay attention to there. And, oh, no. That's what I was already on. All right, and VIX future spread here still in contango. No issues there. No issues here. Everything's looking bullish there. And the VVIX is under the volatility of the volatility under 105, under 100, under 103. This is being suppressed up and over the 93 half. Okay, we can talk about VVIX coming up back up into 100. Potentially that 103, 105 area. Anything over that, then we can talk about some more volatility, but overall suppressed there. So really no issues too much from the volatility unless we start seeing those readings up and over 93 half. All right, guys. Well, that's everything that I wanted to go over for this week's video. Thank you so much for joining me. If you haven't already, if you would subscribe to the channel, it means a lot to me, helps out me and the channel, and it's free. So I really appreciate it. Sorry about that. I was going to cough again. Fighting it back. But yes, thank you so much for joining me. Really appreciate it. Remember what we say, a prepared trader is a profitable trader. So plan your trades and trade your plans. I wish everybody a great trading week, and I will see you guys out there. Take care.